Hi and welcome to Allegro Enterprises. My name is Makhosazane Luthuli. I'm the director of the organization, and today I'm proud to host the Budget Buster mini-series for 2022-2023 fiscal year. My guest today is Mwendabai Kalaluka. Mwendabai is a leading business consultant, academic, and managing consultant of the practice IABC here in Johannesburg. Hi Mwendabai, it's good to have you.
Hi Makhosazane, nice to be with you today.
Thank you for coming and for unpacking this budget with us. I'm really looking forward to this mini-series.
Thank you.
Last year, the minister announced that the corporate income tax rate would reduce from 28% to 27%. Obviously, everyone was very excited, but it's not always what it says on the sticker. So maybe you can tell us, what does it mean? When does it become effective? And what are those hidden T's and C's that we need to be aware of?
That's an interesting one, and thanks for bringing that up. So I think in responding to that, let me also just highlight that government was actually under pressure to reduce the corporate income tax rate. And the reason for this is if you check the movement of the tax rates across the world globally, if you look at US, all the countries and the major economies, they cut down on corporate income tax in order for them to boost business and drive business activity. So it was inevitable that the South African government would also do the same. So they then announced in the last budget that the corporate income tax will be cut down to 27% from the current 28%. But this is only effective from the 31st of March 2023. So which means it will only apply to businesses with financial year ends which end after the 31st of March 2023.
So we've got about another year to go before we even start to
start enjoying that 27%, that's correct.
Okay. So what is then interesting is how that would filter through into business plans, into budgets, and even just from an accounting perspective, the deferred tax calculations. I think these are all things that we would need to keep in mind. Have you started to see your clients planning around that in their financial planning for the lower tax rates and what it'll mean for their businesses?
To be honest, I think your tax practitioners and business advisors, your professionals in the space now have to play a critical role, because in most cases, the businesses themselves do not have this information readily available on their hands. So it's for the business professionals to advise, to say, look, this change is coming soon. And therefore, as they advise their clients in terms of your tax computations, like you rightfully said, in the context of deferred tax, you need to factor that in. When you do business plans and you are now projecting your tax obligations and your tax expenses, you need to obviously factor in the fact that from 2023, the tax rate is going to change.
So it's going to be interesting to see how in the professional space then that starts to get applied. I'm going to move on to another incentive for corporates, which is then the employment tax incentive, the ETI.
Yes.
I'm curious, have you seen a big uptake of this incentive in business? Do people think it's worth it? Have they gone and actually applied it? Or, has it kind of fallen through the cracks a bit? What has been your experience?